Good morning, everyone. Good morning, everyone. Hope everybody's doing well. All right. Good morning, everyone. Ooh. Good morning, everyone. Hope everybody's doing well. All right. Good morning, everyone. Ooh. Good morning, everyone. Hope everybody's doing well. Hello, hello. Hope everybody can hear me okay. Hello, hello. All right, let me just mute this. Let me mute the other one. And I think we're live. All right. Good, 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 good. I hope everybody's doing well today. Let me see if there's anybody in here. Good. People are watching. That's good. Let me see if I could hear you guys. That would be really good. There we go. Hey, Brian. Good morning. Glad you could hear me okay. Let me know if you can't hear me, okay? Please. Again, I haven't been doing these morning videos for too long, but I wanted to make sure that you guys could hear me and see me okay. And I hope everybody's doing well. Remember, this video is going to be recorded and it's going to be played a little bit later today. But I want to make sure I want to start doing these live so you guys could hear me, talk to me, and you guys can actually ask me questions in the morning. So please, please, please let me know if you guys could hear me okay. Brian, can you hear me okay? Let me know. Let me just make sure my volume is good. Mhm. All right. Yeah, I sound okay. Good, 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 good. All right. Let's talk a little bit about the markets and let's talk a little bit about what's going on. And if you guys have any questions, please feel free to ask me while I'm here. And again, this will be recorded. So just to start off, we're still in a very, very choppy environment. The Nasdaq is up, as you can see here. The S&P's flat. There's not really much going on. The Dow is down. This is very fragmented. This is exactly what happens when there's very few fund managers. Good morning, David. Good morning, Bradley. Out. And again, this is something you guys should remember because when markets are this fragmented, you have a very low probability trading environment, and that doesn't lead you to anything positive. So we got to be really careful. With that said, we got a couple of reports today. Now, one of the things reports do, and this is very dangerous, we're going to have a very low probability trading environment today. But the problem is when you have Fed data coming out and there's no volume, that data can be extenuatingly dramatic. In other words, a report that wouldn't have much of an impact on the market can cause a pretty big slide. And that's something we want to be careful of. So the good thing is the only report that's coming out at 10 a.m. after the market opens is the pending home sales. Now, believe it or not, this is a fairly big report. And so far, with the interest rate sentiment moving lower, I believe we're going to see a lot more upside in home sales. The issue with home sales is cyclically and seasonally, pending home sales usually take off first quarter, second quarter, not fourth quarter, because a lot of folks buy their homes in the spring. They want to have a new address before kids start school next year. And that usually doesn't happen in the winter. People don't like to visit homes. They don't like to see homes. It's just a seasonally low period for homes. So if this number is better than expected, that means the real estate market really is heating up. Another factor that's helping that scenario is the fact that we broke out of bonds yesterday. Now, um, Brian, you may be able to, I think we're recording it at 1080. You may be able to switch over to 1080p. It's actually recording it at 1080 right now. We made that switch just a few days ago. So, Infinity, how are you? Infinitely, how are you? So yeah, Brian, it's a 1080p and it may be a little slow in the beginning, but it should switch to 1080p. We actually were doing it at 720 and we had to call Zoom to switch it to uh, to 1080. So it is a 1080p, or it will be a 1080p by the time you guys get it, and it'll be on YouTube. But nonetheless, let's continue this. The bond market broke out higher here. I don't believe the bond market has a lot more to go unless the Fed's going to start adopting and saying, yes, we are in fact looking to lower rates, which they haven't done. But this thing's beating an eager beaver right now. And the bond market's basically telling us, look, we believe the interest rates are in fact going down. And I believe this is going to be the biggest snafu. Dr. Serena, how are you? I believe this is going to be the biggest snafu of next quarter and the worst thing for the market when the market realizes that, hey, we may not be lowering till May or July. My prognosis is no earlier than May. I believe we're going to see it May or at the earliest. Probably July. I don't think they'll be in a hurry to do it because they're still waiting to see the impact of what they've had and what it's done to the market. But again, we can't argue with the facts, and the fact is we're breaking out. So this is telling us that interest rate sensitive stocks should be doing better. And by the way, if you have questions, guys, I'm looking at your chat. If you guys have questions, this is a great time to ask me a question and I'll answer before I'm done because it saves me time. I don't have to process this video, so I could actually go live twice as long without extra work. It's a lot less work for me to do it live than to record it, process it, and post it on YouTube. So feel free to ask me any questions. But I want to show you the impact of this, of what you're seeing right here, is the fact that if you look at the sectors, you will see, and this sector analysis doesn't lie. This is the last 5 days. Russell 2000, very interest rate sensitive. Home builders, extremely interest rate sensitive. And today we have existing home sales, so keep an eye. Real estate, obviously, with home builders. Retail, semiconductors, mid caps. Anytime you see mid caps and Russell 2000 rally, it typically means that interest rates are on the way down. Something else I want to bring to your attention, and this is pretty important. And by the way, there's about a 5-second delay. I think there's a 5-second delay between the time I'm talking and the time you guys are getting this, just FYI. But look at this, mid caps and small caps. I want to show you this. And folks, please, 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 what I'm about to show you, for some reason, you're not going to see it anywhere else. I don't know why. It's real simple, but I want to show you this. I've showed this years ago, and we were right on the money. Look at this. Pay attention. This is really important, and this is very meaningful. This is a 5-year graph of the Russell 2000, okay? Look at where it peaked out. It peaked out 11/8/2021. Look at the dates right here. Look at when I point right there. See that? So about 2 years ago, right? Let's see here. 21, 22, 22. Yeah. 2 years ago, we peaked out and the bear market started, and then we've been consolidating, right? Let me just give you a clean template. Here, nice and clean. We peaked out right here. The date is, it doesn't want to give me the date. There it is. 11/1/2021, 2 years ago. Now watch this. This is a good one. Watch this. This is the S&P 500. Look when the S&P peaked out. 2 months later. 2 months later. So again, look at IWM. It's important to see this, and I'll tell you why. Look right here. 11/15/2021, right? Again, look at SPY. About 2 months later. Now, why? Why did the SPY peak out 2 months later? Because the small caps lead the large caps. And right now, and by the way, I brought this up 2 years ago when this happened. I explained, I drew these lines. I don't know how long you guys have been following me, but I drew these lines back around here. And I told you, this is what I said. I said, nothing good's going to happen until we break out. Well, we're breaking out. The question is this going to be a false breakout and we're going to come back into this channel? Or are we going to break out, and move higher? My answer to that, and if this is happening with the IWM, this should start happening with the SPY, but the SPY is already near all-time highs, and this is still down here. So we are still lagging behind. The small caps are still lagging. They're not leading behind. And if they are leading behind, they're down here. They're not up here. So the fact that the small caps are not leading and that they're not making all-time highs and leading ahead of the SPY is a big, big red flag. And why is it? Now, let me add something to this discussion. This is very, very important. So now look at this. I'm going to add. So we're looking at the small caps. We're looking at the large caps. And you could see that the small caps are clearly still lagging behind the large caps. And now, how about taking this into account? And I showed you this yesterday. This is the overall stock market, okay? This is the percentage of stocks in the overall stock market. And look at where we're at right now. This is a 5-year graph. Look at momentum levels on the S&P 500. Let me make it more palatable for you. This is 10 years, and I showed you this yesterday. So let's put the picture together. Interest rates are going lower. Small caps are rallying. The large caps, however, are still outperforming the small caps, and that should not be the case in a bull market. We're also seeing that small caps are extremely overbought. Extremely overbought. Look how overbought they are. This is 10 years. How many times have we gone here? One. This is, and by the way, this is not S&P 500. This is the entire stock market. This is all stocks above 50 days. So this takes account everything. Look at where we're at. This is, do you think there's much more upside here? No. Now, before you get too worked up, there's two ways this can resolve itself. We can just go sideways for a while and just stay choppy, and this level will naturally release itself, or we can have a big drop. Now, typically after we see this, what do you see? A big freaking drop. Excuse my French. So I'm very concerned that the stock market right now is in a place when it'll start. Let me just go back to, I'm really concerned that the stock market, especially the large caps, are a little bit overbought, and we're going to start seeing, remember these lines I drew? Let me just make this template different here. And the lines we drew here are going to start coming down and breaking these levels, and we're going to hit the 200-day moving average or the 50 and the 100, which are in line with each other. So I'm really, really concerned that this is going to be the next couple of months. Now, am I predicting? Yes, obviously I am predicting. And also, by the way, look at where we are right now with the S&P. If we don't break through this level, which is the previous all-time high, this is the last couple of years, we're going to come back down. Also, with this rally right here, the odds are we're going to retrace and at least come down to 450, 460, 450 level. Otherwise, it wouldn't be a good breakdown, a good breakout. Everything has to come up. So I think we're a little bit overbought, and I think we're a little bit stretched. Do you guys understand? Is it clear what I'm saying? If I am, please say yes in the chat so that I can, I make sure that we're all on the same page before I move on. I'll give you guys just a few seconds before I move on. And let's get Fed data here. Just to make sure. All right, just to give you a little update on the fundamentals and what's driving the market, you could see that the S&P posted a 2-year high, the blue chips posted, and the NASDAQ record highs. Troy says, how does the equal weighted S&P compare to the small cap SPY? What's the ticker? ES, what is it? What's the ticker symbol? I'll look at it right now. ES, what is it? God, I haven't looked at it in a while. Give me the ticker symbol, please, and I'll look at it. But let's look at momentum levels real quick. I'll tell you what, give me the ticker symbol. I'll look at it real quick. It just slipped my mind. It's early in the morning and it slipped my mind. You guys give it to me and I'll look at the equal weighted SPY. T-Buzz was talking about it just the other day. It would actually be very interesting to look at it. I just haven't done so in a while. I've been so focused on the momentum levels. But if you guys remember what the ticker symbol is, please post it and I'll look at it right now. So as you can see, markets are very bullish. We still have a 72% chance that the Fed is going to cut rates, which is baked into the market, not baked into what they're saying. Very, very important difference. Very, very important difference. Huge difference. We have jobless claims today. This is going to be a complete nothing burger. We haven't seen We haven't seen it's not BITF. No, 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 Bradley, it's not. I need to see the equal weighted SPY. If you guys remember the ticker, give it to me, and I do want to take a look at it because then we'll see how the large caps are driving the market. So this is not going to be a big report. It's coming out a little later today. The big report is going to be home sales, existing home sales. All right, that's going to be the big one. Chinese market sharply higher, giving us a little tailwind, which is good. Japan closed lower. And by the way, I want to show you guys something. And hardly anybody was talking about this. I was talking about this a year ago. Bank of Japan governor continued laying the groundwork for the country's first interest rate increase since 2007. That's something we've been talking about. I brought that up at the last private session that we had about 9 months ago, maybe about 8 months ago. But new prime minister, he doesn't want to follow the old guy. He's a U.S. educated economist. And one of the reasons why Warren Buffett about a year ago started putting a lot of money into Japanese companies is because he got heads up that they're going to start increasing rates, and he likes a good bargain. So again, I also talked about this stock, SQM, just a few days ago. It's now up over 7%. Now, looking at all the sectors, you know what? I'll take a look at equal weighted SPY. I'll find it right now. I do want to look at it. You got me all interested. Equal weighted SPY. What's the ticker symbol? What's that ticker symbol? SPW. Or no, it's right here. EWI. Let me type that in. EWI. WI. Nope, that's Italy. What the heck? SPW, is it? Hold on. RSP. That's it. Thank you. Thank you, Brian. RSP. RSP. Yes. Thank you. Appreciate it. Yes, equal weighted. Okay, so this is the equal weighted. Let's take a look at it. This is interesting. Let's see the impact of FANG stocks. This is equal weighted, and this is the regular one. I'm not seeing anything. And look at that. It looks the same. And one of the reasons is, keep in mind something really important. One of the reasons why they're seeing it similarly is because look, the Dow, NASDAQ, they're all going higher. So it's not just the FANG stocks. About 6 months ago, it was different. We had just a rally in FANG stocks. But when the whole AI revolution came about, I loved how everybody's calling chip stocks AI all of a sudden. But remember, it's pretty broad. So what we are seeing, so who asked me this question? Somebody asked me this question. Was it, it was somebody who asked me, it was Troy. Troy, you asked me this question? No, they look exactly the same, man. I mean, look at this. This is overdone. And on a 5-year basis, they are not at the high, but close to the high. So you could see that the FANG stocks have been really helping us out substantially. So what are we looking at right now? Typically, I give you guys ETFs to work with. We could see interest rates are still so much impacting the market. What do I like right now? I like real estate. I like XHB. I like XLRE. I like these right now. I think they're going to keep drifting higher towards year end and the first 2 days of the year. I read it up yesterday. I thought January 2nd, the year end rally ends. It actually ends the 4th of January. So we still have a few more days left. It's very hard to find good quality stocks right now because look at this. Financials, consumer discretionary. It's a very broad-based rally. The only thing this rally is not participating is energies. And I think energies are going to break out right here and start coming back up. I think this was a bear trap right here. Markets are full of traps, but we haven't been trapped by, look, consumer staples, QQQ. I mean, look at this smooth trend. This is buying time, but you got to be careful, be cautious right now. But if I was to say what sectors that I really like, I like the most interest rate sensitive sectors: retail, real estate, and small caps, and semiconductors. But honestly, I think semiconductors are a little overbought. So I would go with retail, real estate, home builders, and Russell. If I had to pick one, which would it be? It would probably be IWM because it is leading right now, as you could see right here. And we always want to go with the leader. Actually, let's see. Yep, it's leading on last 5 trading days. It's second in the last 3 weeks behind home builders. So you could see that this is where the real money's been flowing into, and retail too, which is great. Home builders retail. So each of these are fine. My suggestion would be to put a little bit into the three of these. So instead of putting 300 shares into one of these, I would put 100 shares into three of these, or 30 shares into these, or just buy one option, because we really don't know. But I like these three: the home builders, the retail, and the Russell right now. I don't think it's going to happen. I don't think we're going to have a major pullback till beginning of the year, unless there's some wacky stuff going on. And if there is wacky stuff going on, it'll probably be uh, covered, like we saw a few weeks ago, that 2 hour downdraft that came down and came back. So I don't believe we're going to have a lot of downside. I think we're mostly going to have choppiness and upside, and a really boring market structure. Now, before I go, and folks, if you have any questions that I didn't answer, you can email me at roger@rogerscott.com. And remember, I'll be live in the VIP room. Let me give you a link to the VIP room so you guys can actually make sure you guys attend the VIP room. It's happening today at 11 a.m. Okay. Want to make sure you guys got that at 11 a.m. Let me make sure the chat here is good. Oh, there it is. There's my link. Good. I love it. I love being able to post links here. And if you guys are not in my Telegram channel, the link will be posted below this video for Telegram. But you can go right here. HTTPS. Oops. You can go right here. Yes. And you can get hooked up to my Telegram channel. I'm hoping to do these morning videos live and do more actionable stuff and have them come out and build up a big audience. We only have 26 people watching this, but usually we have about 700-800 people watching the whole video. So this will be turned into a video, and you guys will be able to see it in real time, recorded. Now, something important I needed to tell you, and this was actually really important. Folks, as we transition into New Year's, we're surrounded by a lot of questions. Is the market poised for a smooth landing, or could rates catapult us to a new high peaks? Will inflation return with a vengeance? A lot of questions. If you're feeling on the edge, you really are not alone. A lot of people are. So here's what we're going to do. As we step into 2024, I want to be more than just prepared. I want you guys to be equipped. So turning point, we're going to have it again today, and I'm going to talk about different things than I talked about yesterday. A special event. It's happening at noon, and it's happening Eastern today at noon. So you guys will be starting New Year's on the right note, and I'll give you some hot stocks that I didn't get into yesterday too. I'll lay out my critical market predictions, sectors to keep an eye on, top stock picks aside from NVIDIA. Don't let this opportunity slip to start the New Year's on the right track. Click the link below this video. I'll post it below this video and sign up. Matter of fact, you know what I'm going to do? I'm going to post it in this video. 1 second. So everybody has it. That's what we need to do. Here we go. Let me just get this thing going here. Yeah, I'm back home. Just got back last night. All right. I will see you guys later. I'll see you actually live in the VIP room at 11 a.m. and I'll see you for Turning Points at noon. And if you guys are enjoying this better than me just pre-recording a video and giving it to you live, which I think is so much better because you guys can ask me questions, I can interact with you, please let me know because I like doing it this way. Thank you so much, and I will see you guys later. Bye.